Who better than Sudhir Sitapati from Godrej Consumer Products joining in right now to talk about that. Sudhir, hi, good morning. Are you all as excited at GCPL about what the GST rationalization could actually mean for your volumes?
Yes, I think it's a very exciting day for all of us, and we've been working late through the night to get the GST transition going, and we hope to start doing the first invoices this morning at 9 o'clock.
Sudhir, can you also give us a sense of the expectation that you have from this retailers with respect to volume jump? Do you see a significant jump in volumes coming in, especially in the last 10 days of this month and going into the festive season of Diwali in October?
I think going into the festive season, we'll certainly see improvements in volume, both coming from the direct reduction in GST, but also because of the disposable income. As far as the last 8 to 10 days goes, it's a little bit complicated. Firstly, the last 8 days, after the GST was announced and before today, kind of sales generally slowed down because everyone's been waiting for GST. And these 8 to 10 days, there are a lot of transitions going on in the market. So we'll have to see how the very, very short term spans out for the FMCG companies. But going into Diwali, it will certainly be a much better Diwali this year, I hope, than last year.
Because shampoos and soaps are something which have been impacted for you, while the other category of detergents, fabric care and home insecticides remain the same. So what is the normal, breakup for you in terms of the portfolio which is getting impacted by this GST?
About 35 to 40% of the portfolio is impacted by GST, which is not a bad thing because after a certain point you get into an inverted duty problem, which 35 to 40 is a good amount to be at 5%.
Right, okay. And Mr. Sitapati, hi, morning. Also help us understand, now that you've spoken about this 35 to 40% impact on your portfolio, help us understand what this could mean for your volumes, especially for your soap category that has been growing at about 2% a year for the last 4 to 5 years. Help us understand, with this GST cut, can the category growth inch up by a couple of percent?
I think the category growth will inch up by a couple of percent, but it will not inch up. It will not go up by 11%, which is the extent of price drop that all of us are giving in GST. But because many of these essentials are pretty inelastic to demand. But what will happen is that because these are large categories, there will be disposable income coming in the hands of consumers, and we hope they will spend on other discretionary categories in FMCG.
The other thing, Sudhir, I wanted to, figure out was, how is it that you actually see consumer behavior pan out post these GST rate rationalization slab changes? Do you sense that there could be a migration to premiumization more than perhaps volume addition?
I think 2-3 things happened in 2017, which is really what we have to go by and what's likely to happen. There was some bit of volume growth that came back into FMCG in 17-18. But more crucially, what happened is a lot of people who were using loose or unbranded products, which often don't pay GST, started moving into branded products because the tax gap was relatively lower. In this case now, in many categories, that gap is reduced even further. So I am expecting a pretty large jump from what we call proxies, unbranded local players, into more branded players. And I think that will be the biggest driver of growth, actually.
Okay, so that sounds optimistic, but also help us understand, Mr. Sitapati, while Q2 was largely marred by your seasonal impact of early monsoons coming in, give us a sense of how much these GST cuts could be able to cover up the kind of impact that we've seen. And of course, you did mention that Diwali you're expecting to see meet better than the last one. But what about the overall festive season, and what could a year-on-year increase be?
See, I think it's very hard for us to judge what's going to happen in Q2 because these are unprecedented transitions and often there are all sorts of issues that go on in transition. So it's very hard for me to predict what will happen in Q2. We'll only know in the next 8 to 10 days. But I think chances are things will be volatile. Which way, I don't know, but they'll certainly be volatile. Going into quarter three, we are quite bullish because GST is a fillip, and you must remember that last year in quarter three, probably driven by food inflation, FMCG and consumption in general had a tough time. So you're really coming off a tough quarter and you're going into a good quarter. So I think all of us are really hopeful about quarter three.
Okay, Mr. Sitapati, thank you so much for joining us, and thanks for your time once again. Pleasure speaking with you.
Thank you so much.
Thank you, sir. Okay, let's move away from that conversation and once again take it across to Neeraj Diwan, who's joined us to help us get a better